The Bank of Japan just shocked markets by doing something that very few traders expected, which was nothing. The market had priced in higher odds that the Bank of Japan was going to tweak its policy, yet they didn't. Now you can see in early trading, this caused the yen to tumble versus the US dollar, but as of the time of this recording, it has almost fully recovered. So what is going on here? Well, basically the Bank of Japan has been in this battle between bond yields and its currency for quite a while now. And this is a battle that cannot be won because you have to sacrifice one in order to save the other. You cannot do both at the same time in perpetuity, which they've been trying to do. So because of this, many traders expected that the Bank of Japan would change its yield curve control policy and allow bonds to fall a little bit more in price, allow those interest rates to go up a little bit. If you take a look at this chart, you can see that the Bank of Japan has held interest rates, has held yields on the 10-year bond in this very, very tight range for a while. There have been a few times where it broke out either to the upside or the downside, but in general, they're going to print as much money as they need to buy as many bonds as they need to keep it within this range. They then increased the range in 2021 so that the highest yields could go would be this 0.25%, and then they increased it again just a few months ago so that the top end of the range would be at 0.5%. So we know the relationship between bond prices and bond yields are inversely correlated. If a bond price drops, that means the yield it pays goes up. And so the Bank of Japan has been saying, we'll print as many dollars as many yen as necessary in order to buy these bonds to keep those bond prices up, to keep those yields low. We want to make sure that government borrowing is cheap, essentially. We want to have this stimulus effect on the economy. And so they've been doing that. But since they've been raising the top end of this yield curve control, the top end of this band, people have been speculating, hey, look, they understand they can't keep doing this forever because the more and more they print yen in order to buy these bonds, yes, that keeps that yield low, but it also hurts the yen. If we take a look at this long-term chart of the yen versus the dollar, obviously there was a big fall in the value of the yen back in 2012 and 2013, and then it was pretty stable for a while, but as they've been defending their yield curve since 2021, it has become increasingly hard, and they've had to do some currency interventions because the yen has been collapsing so quickly. Because you can't just keep on printing your currency into oblivion and have the value stay the same. Now, one thing about Japan is that they do have massive foreign currency reserves. They have a lot of US treasuries. So one of the ways that they circumvent having their currency completely collapse is by selling some of their other assets to buy back the yen. So they're printing yen to buy up their own government bonds, and at the same time, they're selling other government bonds like US treasuries in order to buy back their yen to stop the price of the yen from collapsing. Obviously, this is a game that cannot continue forever. You can study story after story after story throughout history of currency pegs and governments trying to manually control the value of their currencies, their bonds, pegs to gold or silver, and it works for a while, but once people realize there's weakness, and once people realize there's an end to this road, the attacks come in, and people say, look, if the end of the road is there, I can short this. I can speed up the distance between getting to the end of that road. I can break the bank there, and then I'll profit massively off of all my shorts. So obviously that's what traders have been doing here as they've been fighting against the yield curve control and the currency controls that the Bank of Japan is trying to do. And that is why the market expected that the Bank of Japan would be phasing out this massive stimulus program because it's a game that literally cannot be continued forever. So most people expected there would be another step towards ending it. Now, it's also true that if the Bank of Japan would have done what was expected here, that would have signaled more weakness. As chief economist at Totan Research said, widening the yield band or dismantling yield curve control completely right now, it would have made the Bank of Japan even more vulnerable to market attack. Instead, the Bank of Japan wanted a clear signal that it will not be making any big changes under Kuroda. And hopefully this signal of strength saying, hey, we're going to do whatever is necessary to maintain the position we have right now will discourage short sellers and traders and speculators from betting against the bank, at least until Kuroda's successor comes in. Kuroda, who is currently the lead at the Bank of Japan, will be having his last policy meeting in March. which means that now the market is starting to look forward to whoever Kuroda's successor will be to see how they will decide to try and steer out, have an exit from these decades of ultra low rates. So at least for the next couple of months, the way that this plays out is that the yield curve control at the Bank of Japan will stay exactly the same. So we're going to see the 10-year government bonds there still trade with a maximum of 0.5% for the yield. We're going to see the yen continue to get printed to buy up as many of these bonds as necessary to maintain that peg, which means further downward pressure on the yen is likely. Now, it's also likely that they will have to engage in currency defenses in order to stop the yen from collapsing either further if this does start to lead to another dramatic leg down in the yen, which is usually going to be done by selling US treasuries. This would put upward pressure on the yields for US treasuries, making interest rates in the US move higher. At the end of the day, Japan is in a position where it really needs to be careful, and many market participants are going to be looking at what happens in March, looking at the things that Kuroda's successor will be saying about the future of monetary policy in Japan, and it could spell big changes as they try and navigate a way out of the pickle that they've put themselves in. But at least until March, it looks like in Japan, business is as usual. As always, really appreciate you guys. Thank you so much for watching. Have a great day.